I'm Michael Holland, and I'm here with Dick Winters and Ele Theochari to talk about all the audit and R&D requirements transatlantic businesses need to consider. For many of our transatlantic clients, they won't have dealt with an audit or the UK requirements that are placed on larger businesses. And overnight, their company might have gone from a small startup to being a large business with a huge cash balance. What's the key things that a transatlantic startup needs to think about?
Well, to be honest, I think there's only one thing, and that's planning, getting ready early. All the rest of it follows that. I mean, I think having the right team in place internally, having somebody internally who's got some idea of what the process is likely to be is a great addition. And then, contracting with somebody such as ourselves who's got experience in dealing with those kind of companies. I mean, if I look at my portfolio, which I did just before we started this, over half of my portfolio is kind of got a US-UK connection. And one of the difficulties you find is they have a US understanding and they have a US finance team, but they'll have no UK understanding, and they'll rely on us to deliver everything that they need. And other way around, because we kind of have US connections, we can do both ways. If you're UK looking to go to the US, we can help. If you're US looking to come the other way, we can help too. So I think planning and getting ready is the first thing, engaging at the right time. And often you even find some of our clients who have agreements with their funders will find out at the last minute there's a filing deadline that's imposed by the funder. The funder will say, you've got 3 months, 6 months, and they'll go, oh, we've got 3 months, 6 months, we only just realised. So we find that a lot. We get them, they get effectively a black mark for no good reason with their funder. Mm-hmm. You haven't met the deadline, so we see that a lot.
Excellent. Yeah, I think a lot of the founders I speak to kind of wear different hats. They are the founder, they are the genius behind the business, but they're also acting as the CFO or the finance director with very little experience. So for those guys, their focus tends to be on what's new, what's the new shiny part of the structure, which might be a new US subsidiary, it might be a new UK subsidiary, but really actually it's the consideration of a group as a whole. So the rules in the UK, do they look at the UK entities only, or is it a group consideration?
Yeah, so for audit purposes, and actually for tax filing purposes as well, tax payment purposes, there are rules about the size of the group. So we're looking at revenue size, balance sheet total, and number of employees. And I guess a number of these early stage startups might have raised, let's just say 10 million. That'll probably put them over one of the limits, and then they've only got to get over one of the other two limits before they're into the audit process. And even if they're not, I think they need to be ready for the next year as well. Mm. I think what we find is they've cobbled together a set of financial statements with perhaps a very small firm of accountants, and when we come to look at it the second year, it's embarrassingly far away from where it should have started, and we and the funders really, really hate that as well.
Excellent. And I think that also speaks to many of these founders that are wearing different hats will often base a lot of decisions on my friend down the pub told me, or my friend has a company and they do this. And R&D is really an area where there's an awful lot of misunderstanding, a lot of myths, there's a lot of things online that you can read that will send you down the wrong path.
Lots of people at the pub, always.
Absolutely. So Ele, what would you talk to a founder about, and what would you say are the key issues to consider from an R&D perspective?
So, as you said, a lot of founders are the brains. It's their baby. So, they're obviously very excited about it, which is great for me because then when I speak to them, it's, great to hear about it. But what they, I think, sometimes miss is payment terms, for example, is a key one. Sometimes they'll say, well, I paid it from my personal bank account to my friend or to somebody else or a family member who's helping me out with something. When actually, when you look at it from an R&D tax perspective, it has to be going through a limited company's accounts and be paid in a very particular way, and it actually has to be paid. And there are nuances in there that I think some founders miss just in the day-to-day of trying to get maybe a product or whatever it might be over the line. And kind of going back to what Nick said as well, often, well, as is always the way with startups, they don't typically have funding from day one. So it will be kind of bootstrapped. It might be two friends. It might be a singular person. And then, as Nick said, they get 10, 20 million pounds funding for something. And they think, okay, I'm going to expand into the US, or I'm going to expand into other parts of Europe or the Middle East or wherever it might be, not realizing the implications from an R&D tax perspective about potentially what they are losing out on by expanding in that way, or just not planning properly and thinking, okay, I maybe have made an R&D claim before, or I know roughly what I can get, not realizing that, for example, if you go from being loss-making to profitable, or if your group expands over a certain size, what that actually means from an R&D tax perspective. So to be honest, it comes back to what Nick said. You just need to plan. You need to speak to somebody before these things happen. And it's not that we would never obviously suggest don't take the funding, but it's more take the funding. This is what the implication is going to be. And actually, these are the steps that you need to go through in order to make sure that your R&D claim is maximised.
I think a relatively small piece of advice at the beginning can really help you to get off in the right direction.
It's hard to go back and start unpicking things. And, like you said, if there's a poor set of accounts, poor records, then when I'm looking at it for R&D, I'm thinking, well, I need to kind of rely on what you've said, and it needs to be accurate. And if you can't actually produce me with the invoices, the contracts, the really salient things that we need in order to make an R&D claim, that is an issue. So
many of our founders will think because it's a transatlantic business, it might preclude them from UK R&D credits. It may change their requirements in the UK. Are transatlantic businesses still able to use the R&D scheme in the UK?
Yeah, absolutely. So there have been some changes recently to both of the schemes, because there was the kind of small company and the large company, and they've basically brought them together to make one. There is another one that goes alongside it, but it's a little bit more generous for loss-making startups. But broadly, what used to happen is where you had a transatlantic business and then they had a UK subsidiary, they would have to claim under the less generous scheme because say the US business was funding that UK business. Now they've said, well, actually, if that company is outside of UK tax, that doesn't matter anymore. So actually, it's become more generous for those businesses in the UK. On the flip side, those UK businesses do need to be using UK-based subcontractors, UK-based staff who are going through PAYE and all that kind of stuff. So kind of it's the give and take there. So it is more generous if you invest more money into UK businesses, into UK employees, that kind of thing. But it also means that the fact that you might be being subsidised by the US entity doesn't really matter anymore.
Perfect. So obviously the key takeaway message is about planning, is to plan in advance and think about these things. At what stage would you recommend, what's the trigger point that a founder should think, okay, I need to talk to Nick and Ele?
The start, the beginning, the very beginning, as early as they can, because with startups, we see it all the time. It's like a runaway train. It can be the difference between week 1 and week 2 can be, we went from nothing to something, and it can all happen very quickly. And it's, I've not been there myself, but getting 100 million Series A, funding, that can just, obviously that takes you into a totally different space. It takes, the founders into a very different headspace. The requirements of what they need, the requirements of what they will want to be doing, it changes so quickly. And that's when the mistakes can be made. And then, like you said, the funders are thinking, well, hang on, you've missed our deadlines now. And then it just puts them on the back foot. So, and just kind of even really minor points they might miss, which could then lead to a higher tax implication or just something like that, or even a fine for something. So I think the earlier you can get in, the better, so that you kind of have all your ducks in a row before you get to these, really big life-changing sums of money.
And I was going to add that, I think even at the moment you're starting to have funding conversations, that is the time to start thinking about things, because I think you need somebody or some understanding at least of the funding process and what they're going to look for. Because actually what they're going to look for is actually quite similar to the kind of regimes that we've described in what we're saying. It's got you need your accounts to be organized. You need your accounting policies to be sensible. You need to be able to demonstrate that you've got good financial acumen, or somebody has got good financial acumen, or you've outsourced that financial acumen, whatever that might be. So I think you can find that you get, significant added value, as in more funding for less percentage, by being ready and being able to demonstrate to a funder that you're ready, you know what you're talking about, you've got your revenue recognition, for example, correctly, you've got your R&D, ducks in a row, and you can quantify these things. I think that's to me, that's the point where, and it's rare that they do, but that's the point at which it's a good idea to start to have a conversation.
And what if a founder's watching this video and something's resonated with them, but they haven't taken that plan in, they haven't got stuff in place? What's the main trick? What should they do? What's their key action to take here?
I mean, I think they've got to find an advisor that is appropriate to them. And while I would say, we have, things which we are really good at, there are obviously others who can do most of what we do. I think we do have some unique selling points, particularly the US UK stuff, which we're particularly strong on. But you just take some advice from a professional firm that's been there, done it before. In our case, I lead our tech sector group, so I see tech companies all the time. I see this process time and time again. And I just think I've seen mistakes being made just by, not taking that free advice even, at the beginning, and not getting involved at the right stage.
So definitely it's what's appropriate for your business. So sometimes, as Nick said, it's, we would be the best people for it. Other times if it's a much smaller outfit, they might think, well, as long as they are reputable and again they have done it, then that's absolutely fine. It's just making sure that you're not going to your friend down the pub and then taking that advice as being correct.
Yeah. So the takeaway is speak to someone, right? If this is something you're worried about or something you think you should be worried about, speak to someone, pick up the phone, have that conversation.
Yeah.
Yeah. Definitely.
Excellent. Thank you both very much.
Thank you.